Let's move on to Restoration Hardware. Technically, the company changed their name to RH Holdings, but come on, it's
not going to stick.
It's Restoration Hardware. They had a great third quarter.
They did.
And the stock popping about 15% this morning. And to go back to Twitter, right before we started recording, I looked at Twitter and saw that Restoration Hardware was halted for trading. And then the news came out that the company is exploring a potential $300 million convertible note offering. So where would you like to start? Do you want to start with the quarter, or do you want to start with the $300 million note?
Let's start with the quarter. The $300 million note doesn't change much for me. Companies do it all the time, and I think their quoted reason was to pursue favorable long-term allocations of capital. So for me, doesn't change very much. What's really interesting to me that I really think is a perfect representation of the market right now is you have this, wonderful earnings, 66% rise in earnings per share, 8% revenue growth. So the stock's up a ton. And it's kind of operating in the same segment that we've seen for Toll Brothers in the sense that they're not directly building houses, but this is a luxury product, right? That they're selling to people, presumably, who are living in luxury houses. I don't think a person in your apartment is going to buy a $5,000 sofa, right? You're looking at home owners, home buyers who are buying premium furniture. And so while the company responded really well in terms of their wonderful earnings report, ultimately they sell premium furniture. And while home building is one of the leading indicators of a change in economic cycle, inventory to sales ratio is one of the lagging ones. So a lot of times these companies are at the butt end of that economic cycle. So they don't start to see poor numbers until people start earning less and they stop spending a ton of money on their furniture. So it's a great quarter. Stock's up a lot. For me, I don't think it says anything about, like I said, the next few years of what earnings are going to be for this company.
And it's down a little bit from where it was a couple of months ago, but this is still a stock that's up about 60% year to date, which is astonishing to me. And maybe I shouldn't be surprised, but it does surprise me a little bit because not that it was this down and out retailer. It had struggled a little bit sort of 2016 into 2017, but they've really turned it around.
Oh, yeah, they have. So wonderful marketing efforts on their part. What's really interesting to see is that people were very happy to see a comparable store sales growth of about 6%, depending on how you define it, about 6% this quarter, which was great, especially when you think about the retail market in general. But when you look back to 2014, that same number was like 22%. And it didn't see the same large pop that it has now. So it's definitely been a stock that is been on a tear, but it's definitely slowing down as well.
I'm also a little surprised that it's only about a $3 billion company. Market cap is like $3.3 billion. I would have guessed, in part because of the business that they are in, and sort of the general footprint that they have, I would have guessed a little bit higher, but I don't know. When I see something like that, when I see particularly a retailer that is doing well, that doesn't have a huge market cap, my mind automatically goes to them being a potential buyout candidate, but they're not. I don't know. They're not really struggling. I mean, to go back to the $300 million note that they offered, or that they're offering up, it almost seems like they're saying, yeah, we're raising money not because we have to. We're doing it because things are going well, and we're looking to push things a little further.
Exactly. And I think maybe part of that is just the perspective that we may have right now as investors. We're kind of accustomed to these very high valued stocks. And so when we see a company, you're right, that has a very small market cap that's doing very well, I think a lot of times people think like, what's going on there? What's wrong? When in reality, maybe it's just a small market, your total addressable market for premium hardware, furniture. It's going to be very different than your IKEAs of the world. So I think part of that's just keeping it in perspective about how many times their average buyer buys one of these and how large that average buyer base really is.
Well, but to go back to the $5,000 sofa, it's almost akin to the way local car dealerships, the smart ones, think about their addressable market, in that they're looking to sell several cars over a 15-year period to the same person. They, you know, it's like, I'm going to sell you a car and hopefully 5 years from now, I'm going to sell you another one, that sort of thing. If you have a good experience at Restoration Hardware buying a $5,000 sofa, then presumably you're going to go back for other things, maybe not more $5,000 sofas, but for more large ticket items.
Yeah, I would imagine that assumption's correct.